Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange, bringing you a review of this week's stock market. On Monday, markets were down slightly as President Trump signed executive orders to withdraw the U.S. from the Trans-Pacific Partnership trade deal, and on statements he made saying he will try and renegotiate the North American Free Trade Agreement. On Tuesday, existing home sales for December fell 2.8% to an annualized 5.49 million units. President Trump also signed more executive orders making it easier to finish building oil pipelines within the country. Markets rallied strongly with the S&P 500 reaching an all-time high and the yield on 10-year Treasury notes ending at 2.46%. On Wednesday, the EIA Petroleum Status Report for the week ending January 20th showed crude oil inventories increasing 2.8 million barrels. President Trump continued issuing executive orders pertaining to enforcement of immigration laws and also spoke of his intent to build a wall on the southern border of the U.S. Trump's aggressive start to his administration, along with some good corporate earnings reports, boosted investor sentiment and markets rallied strongly, with the Dow Industrials gaining 155 points to close above 20,000 for the very first time. The S&P 500 also closed at a record high. 10-year Treasuries closed at 2.52%, and the U.S. dollar fell against most major currencies. On Thursday, jobless claims for the week ending January 21st jumped 22,000 to 259,000, and new home sales for December fell over 10% to an annualized rate of 536,000. Markets ended the day mixed. On Friday, new orders for durable goods in December fell 0.4% compared to the prior month's 4.8% decline, and the first estimate of the fourth quarter GDP came in at a disappointing 1.9%. Markets opened slightly lower. Now let's take a look at some stocks. Alibaba Group Holding Limited raised its revenue outlook as the Chinese e-commerce giant posted strong third quarter revenues thanks to robust sales in core commerce and cloud computing. The company said revenue rose 54% to $7.7 billion in the fiscal third quarter, and it marks the third consecutive quarter of revenue growth greater than 50%. Shares were up over 4% on the news. On Wednesday, shares of Boeing Company rose after its report of fourth quarter results showed revenue dropping 1.2% to $23.3 billion, slightly surpassing analyst estimates of $23.1 billion. Adjusted earnings per share were $2.47, above expectations of $2.32. The company also repurchased 55.1 million shares for $7 billion during 2016. Verizon Communications shares fell over 4% after the company posted disappointing earnings of 86 cents a share on revenues of $32.3 billion. Analysts were expecting 89 cents per share on revenues of $32 billion. Verizon added a net 591,000 retail postpaid subscribers in the quarter and increased its retail connections by 1.9% year over year to 114.2 million. On Monday, U.S. District Court Judge John Bates denied Aetna and Humana's merger deal, saying it violated antitrust law. In his ruling, Bates wrote the merger would be likely to substantially lessen competition for health insurance sold on the public exchanges. Shares of Aetna closed down almost 3%, while Humana shares gained more than 2%. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.